Hello again, everybody. It's Harry Boxer, the technical trader. At thetechtrader.com, it is May 1st, and the indices started off May like they wanted to sell and go away. We had a really bad five-wave decline today. The market kind of rolled over from a key rally and may have started a new little mini downtrend at the very least. You never know when it starts, how far it goes. But I wanted to be prepared for the any coming potential pullback. And some of the stocks that we have on our boxes shorts list particularly look weak, and I wanted to point them out so we're at least prepared if the market does carry forward to the downside. AGU is a stock that we've seen have a long-term channel break, a major channel here that saw the stock go from the mid-50s into the high 115 range. Came down at a 1, 2, 3, 4, 5-wave decline, and it's at key support. I'm not sure whether this is actually 5 waves or it's 1, 2, and 3, but because this little blip here retested resistance and the trend line. But on an overall basis, stepping back and looking at this pattern, you'll see massive support around 90. Keep an eye on this stock. If it should dip under the 90 range, it could fall pretty rapidly down into the mid-70s at some point. So we'll be watching this one. And you can see that the technicals have deteriorated to the point where the unbalanced volume is near the bottom of the window. So worth keeping an eye on. A bit oversold, but perhaps it gets more steeply oversold first. CCL, a stock I've hated for quite a while. After breaking and snapping back here, is rollover from the mid-30s down to the low 30s. Not a big drop, and this isn't a big scale on it, but I think it's going to get down to 31 3/4 and then maybe even 29.5 to test these lows from back in here, particularly the way this technicals look in this one. CVLT, this is a massive head and shoulders top, left shoulder, head, right shoulder. Well, if nothing else, it broke the trend line, came down hard, bounced off support, retested, and formed a big wedge. This bear wedge, if you will, could break to the downside, and if it takes out 67, could fall all the way down to 60 for a quick 10, 11 points to the downside. So keep your eye on this one. Next, CYBX, a massive year-long head and shoulders. You can see the major trend channel here for the last couple of years was beautiful until it plunged here in January. That was followed by a wedging-type action, and then slow, easy, steady rollover, which this morning reached 42.5, happens to be right on that trend line, or should I say support line, or even the neckline for the massive top. So we'll have to see, keep your eye on that level. If 42.5 is taken out, you can see a quick move down to 39, and maybe even back towards 36 pretty quickly. GEOS looking pretty ugly in here. You can see the major trend line was broken. Stock came down, formed a little bear wedge, rolled over to test the January lows and bounced, but then quickly rolled over and broke that level today. I'm looking for, I see the bottom of the channel here, if I've drawn this correctly, and it appears to me we're going to have to accelerate the downtrend a little bit, and perhaps even look at something at this angle. If that's the case, then GEOS could fall rapidly to 70 and maybe even mid-60s. GPI, another massive head and shoulders type top with a left shoulder complex here, a head with a bad break to the downside, and another right shoulder complex forming that sort of pattern. Now, the major long-term channel bottom was broken and then snapped back through, but the declining top line thwarted the advance and it dropped $1.53 today. Keep an eye on the stock. If it comes down below that line and then takes out that line, we could see a precipitous drop that takes it into near the 50 range. NILE and ILE, we've been negative on this since this top pattern broke here and then the rising wedge. Now it hasn't really fallen apart. It's come down very slowly and steadily. Recently bounced back up to test the declining top line at the channel top. A rollover here could be disastrous as a breakdown below the 29.5, 30 range could lead to a rollover into the mid-20s, if not worse. And Northern Tier Energy, a stock that we've been negative on for a while. When this broke here and then formed that rising wedge here, put out a box of short, which worked very well for 3 days. It then bounced and pulled back down. Looking at the overall pattern, it does look like a massive little consolidation range. Now, what you need to be watching on NTI is for breakdown below 24 3/4 or thereabout. If that occurs, you're going to see a quick test down around 23 and maybe even towards 20. Herkenelmer with a big bad break. This massive topping formation and trend line all were broken with one fell swoop and a breakaway gap to the downside. This was followed by a 2 or 3 day reversal, but today a very poor close. Just feels to me like this wants to go lower. I'm looking for a test of this line down around 28 next. Beyond that, 25. Robert Half, the employment firm, rolled over hard, completed a little topping pattern here, 4 or 5 day little bear flag, and then broke down again. To me, it looks like we could see 28.5 pretty quickly on this one. Raymond James Financial, with the left shoulder, head, and right shoulder, broke the neckline a week ago, tried to bounce yesterday, and right back down the dollar today. Take a look at the long-term pattern. It's right on the trend line, and a break here should lead to a quick move to test the 36 range that it held it in October. A break of that would be a disaster down towards 31. SolarWinds, massive break, but it came slowly. This was the one bar that broke it. Then a 4 or 5 day little bear flag, another breakdown, a steady fall, a rise or test of the moving average. Today was a disaster. It's down 740 or 14.5%, and it closed right at the support zone, but took out the October lows and is now at the lowest level since more than a year ago. I take that back, since last July, August. So if we break down here, we're going to see potentially a move down towards 36, my next target. VAR, that's Varian Medical, little head and shoulders type top here. Break down, bounce back to resistance, fail, break down again, bounce back from a little bear wedge. I think we got a shot at breaking 61.2, coming down to 57 on this one. And lastly is VMW, which has formed a big, big, long, massive 2-year topping pattern in here. You can see that this line here was recently broken with a big breakaway gap, retested, and then right back down to the neckline. You can see that this neckline is held for more than 2.5 years. And a break of this level could lead to a very nasty decline, taking us into the mid to high 50s. So keep an eye on that VMW. And that's it for tonight. Everyone be good tomorrow. It's going to be a really interesting day, folks. It's going to be a key day too, because with the break today, if there's any downside follow through, we could be going down for a bit.